What's up, guys? How y'all doing? Welcome to the Cosmic Training Academy channel. And my name is Mr. Cosmic. And basically what we're doing here today is we are talking about selling puts for profit. And I really wanted to address a serious situation when it comes down to selling puts for profit is that you have to really understand as an options trader. See, so as an options trader, you have to understand, if you come into options trading with the intent to make a lot of money with a small amount of money, then that means you're gonna take a lot of risk. The objective here is to make consistent money, however we need to make it. So, it's not about the ups and downs. It's about the consistent numbers, right? Okay, so that's what we're doing. So, just to give you an idea, it's just talking about what type of size account that you need in order to sell options. And the reason why we're talking about selling options is because I employ the strategy of the wheel strategy. If you're a trader or a new trader, you can look into it, or you can look at some of my old videos where I talk about the wheel strategy. It's not that popular, and perhaps it's getting more popular now. But I stumbled upon it through time, just years of doing this and working on consistent strategies, and that's how I came across the wheel strategy through doing every other strategy probably before this one. So that's why I say, the wheel strategy is probably one of the most consistent ones, albeit one of the least glamorous, and also one of the least profitable in the short term. So if you're looking to flip and make $500, is it possible? Yes, but this is the things that we're trying to address today in this video, which is how much money does it really take to make X amount of dollars per month. See, a lot of people want to tell you it's so easy to make $1,000 a month. Ah, doing what with how much risk is the question, and how consistent can you do that? Can you do it every month, or 6 out of 10 months you're gonna lose? So that's where the question actually is. Things like high dividend yields are things that we look at when it comes down to this kind of when we're trading options. Hold on, let me see. Right, so back to what we were talking about. Sorry about that. We essentially are trying to figure out how can we maximize our profit return by with the smallest amount of money. That's essentially what we're always looking to do. Less risk, less capital, but more money. Okay, but you got to remember you can always do less capital, high risk, and make a lot of money, but it's high risk and low probability. You know, okay. Probability is one thing that you will see I always talk about. Probability, okay? So, anyway, let's go here. Just to give you an example, here is, I'm going to start painting. Here is where you will see dividend yields, right? So these are stocks that have high dividend yields. You can see them right here, higher dividends. You can see 9%, 6%, so on and so forth, right? Okay. So, are we looking for just high dividend yields? Well, that's the question. Do you want something that I prefer to deal with things that have uh, dividends? The reason why is because there's a better chance of you making long-term profit. But let me tell you the downside. Downside of high dividend yield products is that a lot of times when it comes down to trading them, because they're usually they're a little bit tricky. Sometimes they make good money in the long run. Sometimes they don't. Just because something giving a good dividend doesn't mean that it's long term profitable. We can always find different products that will show you that. For instance, let's go to Whirlpool down here. I don't know what this one doing. Okay, so let's look at it. And I haven't even prepared this. I'm just going off the cuff. I'm just going to show you guys because I thought about it today, and I'm going to look at some stuff today. Okay, so here's Whirlpool. If we look at the last week, look at the last month, we can see that it's down $21. Look at the last 3 months. We can see it's up $1 in the last 3 months. Last 1 year, down $36 in the past year. That's a lot of money on a $130 something dollar stock. 5 years, it went up $7 in the last 5 years. So as you can see, in 5 years, it's taken a very slow approach to growth. So that's the thing you have to remember. It's things that do good dividends and consistent dividends, or are dividend aristocrats, what some people refer to them as, they tend to grow slower. And when they have upturns, the upturn is not dramatic. And when they have downturns, the downturns seem very dramatic. But really, it's because it takes so long for them to go up that when they do have downs, it seems like it's terrible. It's horrible. Because they're designed to grow over long periods of time. Okay? So keep that in mind whenever you're dealing with a dividend asset, dividend paying asset. Second thing is implied volatility. So if you look right here, you see implied volatility, right? So I've created these little stock screeners that this broker allows you to do. So basically, what high implied volatility is, basically how much risk we're gonna be taking. That's the way I like to look at it. Implied volatility is how volatile, exactly as it says. How volatile is it? How much risk is it chance of it going up and risk of it chance of going down? Okay? I don't have a lot of in this list apparently, so you can see this. But okay, so let's just take a look at the one down at 19% at Kinder Morgan, right? Okay, so let's go to Kinder Morgan and see. Okay, so let's just say, let's start off with this. We know we got a 19% implied volatility. Not bad, not high though, because the reality is 19% ain't really nothing. I like to, actually, I'm not even going to touch that. Implied volatility, you should be trying to shoot somewhere around 50%. That's what I say. So on this particular list that I have here, the only one I have that's close to that is this one, UWM. And as you can see, you can look at it. You can see what it's doing over time, past 3 months. It's not an expensive asset. So think of it. For $581, you could have 100 shares of this. So that means if you have let's just go with $600. If you have a $600 account, then you could purchase 100 shares of this, right? In options, that in order to control, sell, do covered calls or covered puts or anything like a secured puts, anything like that, you have to have enough money, unless you're doing a spread, which would offset that. And that's the purpose of spread. So when you don't have enough money, you can use a spread to offset that. But you just got to watch spreads, because if you want to do spreads, they're very exciting and very fun. But spreads are for people who plan on watching. Even if you closing your spreads, you need to be watching it. Because trust me, brokers, when it comes down to spreads, will skip right over your closed contracts. That your limit closed. It'll just slip right over it. I don't know why. I don't know how. I don't know what. Some brokers are better at it than others, but you just have to be careful with that. Okay, so UWM 581. Let's go down. Let's take a look. We're going to trade options. Here we go. Right now it's around August 21st, 2023. Here's September. And that's imagine when we're selling options, what we're trying to do is we're trying to at least give it some time to make us some money. And with this example, we're just going to be talking about like monthly income, right? Okay, so this is if this is August 21st, here's September 22nd. That's a month out, right? Just 30 days. A lot of people say you should go 45 days, you should go 2 months. You be the judge of that. It depends on how much you want to, how much time you want to have your money in limbo or at risk. That's your call. If you're trying to settle your books once a month, then do it monthly. Don't let nobody tell you what your trade strategy is. You do what the hell you want to do. You just figure it out through trial and error and based upon what is your financial situation. Okay, nobody can tell you the answer to that. Um, so here we go. Now we're looking at this UWMC. Now we could right now. What are we going to look at? We're going to look at selling puts. Why? Because here's the share price, and we want to get it cheaper than what it is right now. But we want to get paid to take it cheaper. And this is where you make the money in this type of strategy. It's not when you buy, it's when you sell. Okay? It's not when you get executed necessarily. It's how you set up the contract. It's just like real estate. It's not how you buy it. It's not when you sell it that you make money in real estate. Real estate, the real money is made in how you negotiate the purchase. Okay? So the same thing with an option. Is with an option, you have to negotiate the purchase right. You got to get it at the right price. You got to get it right time with the right implied volatility, with the right probability. See, all of these things come into play. And that's what makes a great option strategist and trader, because he's willing to take all of these different components of an option, put it all together on every single time before he makes the trade. You can't just take implied volatility on this trade and just use that as your only determining factor as to whether you're going to take. You can't take how much you get back, how much premium you get paid as the only reason why you took this trade on this trade over here. And over on this trade, I'm just going with whether they pay dividends. So I'm going to do my options trade based on whether they pay dividends. Oh, you know what? On this trade, I'm going to look at, the break even price only. Or this trade, no, you can't. A great option and a consistent option trader has to look at implied volatility. They got to look at probability. They got to look at a time decay. They looking at theta. They looking at expiration date. They looking at return on the asset. Premium. So all of these things you have to look at. It's like doing your homework, and it's attention to detail. I realize I have attention to detail to things that I'm interested in having attention to detail too. So anyway, let's moving right along. So here we go. One of the things I like to do is we already looked at the date. We're saying we're going a month out just for this conversation's sake, right? So the next thing we're going to do is we're going to go look at what I like to do is look at selling puts. Okay. So let's get these prices right. Okay. So now we know where the share price is at right here, 581. We know that these are the prices going down, as you can see, right? And here, and this broker shows you a chance of profit. So we know with all of them, you got high chances of profit. But look what you got here. 0, 0, 0. See? So that means even if we sold a put right underneath the strike price, we got a 95% chance of profit, but we're going to get 0 premium, 0 premium, 0. So essentially, this isn't a good one to trade. You have to know that when you see it. Don't try to start going. Listen, if they ain't paying no premium for a month out, no premium. In my opinion, I'm not finna start going way out 6 months just to make $5. It's not worth it. So, okay. So that's just my opinion. You do what the hell you want to do. So anyway, let's look at other things. Options with good fundamentals. Okay. So this dividends price. Volume. Another thing, yes, always look at volume. You know, volume. If you don't have 500,000, in my opinion, half a million or better volume, then who's going? Remember, this is a zero sum game when it comes down to options. Wherever somebody's winning, somebody's losing. So if you know, if your volume, if you don't have enough volume in an option, then that means it's hard to open or close, and it's hard to get in or get out of positions. So if you're finding that you're having a problem, difficulty getting into a position, it may be because the volume is too low or that your position is too far out of the norm, which means you might want to go look for a different trade. Because what you don't want to do, and which I've done several times, is I didn't take the time to look at the volume, and guess what happened? I get into a trade that I could never get out of. And it just kept falling and kept falling and kept falling. There was nothing I could do. Why? Because there was nobody on the other side who was interested in buying it and taking it off of my hands. So I was stuck. So keep that in mind. Always look at the volume. Again, you cannot be a one perspective trader to be in options. You have to look at everything. Okay? So that's another thing. So let's look at something. Let's go down here. I'm trying to find something that I know I'm aware of this one. Let's go to NAT. I don't remember how much money we can make, but let's just see. So we know that it's a $415 option. Because, you know, $4 times 100 is 400. So we know in your account, if you're going to cover this, you need to be able to have $415 in your account. Okay? So let's go down to trade. Let's look at options. Okay? Then let's go a month out. Well, since this September 15 won't be exactly a month, let's go out to October 20th. So that's giving us 2 months. So September 20, October 20, that's giving us about 2 months. Okay? Now that should be plenty of time. We're selling puts. Now another thing that I like to do with selling puts is I like to look at the highs and lows, the 52 weeks highs and lows. That's a little gem that I like to do. I like to come right down here and look at the 52-week highs and lows. That's the highs, and that's the lows. So the high was $4.65. The low is $2.33. What I like, and look at that dividend yield, 10% almost. Not a bad one. Look at the volume. See, 2 million. Average volume 2 million. Look at that. So we know it's a lot of volume. We know that the high is $4.60. We know that the annual low is $2.30. We know that if we end up holding this, we get a 9% dividend yield. Come on. That's why I know this one, because after analyzing this stuff a couple times, I started running to the ones that I know that I kind of like. Okay, so let's look at the analyst ratings just for the hell of it. And look, 83% buy rating. That's interesting. And now look at the quarterly earnings. It's telling you what we're doing. Quarter 2, quarter 3, quarter 4. Look at that. That's why they're getting that 80% buy rating. See? So this is definitely one for me that I would seriously consider. So if you had a $500 account, this is one of those ones that hit all the buzzers. They hit all the buzzers. So I'm gonna set up a trade right now. Let's go. So 415. So $415 is what we need. Okay. All right. So 1 week out and 1 month out. Not really very much movement. 38.49 cents. And 1 year, $1.30. Not too bad, you know. So let's go trade an option. Let's look at it. Let's go 2 months out. Give it some time to mature. 415 is the share price. We know it can go down to $2 and something cents. Now we know we're not gonna go down to 250 because we're not gonna make no money. As you can see it right here. As you can see right there, no money. no money here, no money here. And the only place that you could make, well, this $10 right here with a 77% chance of profit. Risky. Me personally, I love 80% and above chance of profit. Anything less than that, especially not when you're going 2 months out. I don't like it. I do not like it. I can tell you that much right now. Um, yeah, I don't like it. Mm-mm. Sorry, guys. I just keep it real with y'all, man. I mean, I, I don't, I like to stay in the 80% range, and, you know, they don't really have it. For me to go 2 months out to October 20th, I only get a 77% range chance of profit. Not today. Maybe another day. Today ain't that day. So let's look at something else. They had to do better. They had to get better for me to do it. Pembina. Let's look at PBA. Okay. We got a dividend yield of 6%. We got volume of 600,000. At least we're over 500,000. I told you over 500,000. 52-week high is 38. The low is 29. Okay, let's see what they got. PBA. Trade options. Let's go out to October 20th. We're going to sell a put. Let's see what we got. Remember, 80% or better? Nothing. Look at that. 69%, you can get $75. But shit, look how close it is. See, a lot of people try to get that $75 premium, but you're right on top of the put. Meaning that the high probability is you're gonna end up having to buy that. So, 30 times 100 is $3,000. So you gotta have three bands, and you're gonna have to chances are, as soon as that share price drop down to $30, boom, you're gonna be executed. And then when they do, you're gonna be, you would have got your $75, but now you better be hoping that it don't fall no more. Okay, so is it possible? Yes. For something like that close in, but for that close to be that close to the price, I would have to be real. I would shorten my timer, which means you're gonna get paid less money. Watch. Okay, see? So nearly half the price. For 1 month off, September 15th, they're gonna give you $40. So you think about it, I mean that's really, again, that's really not that bad. The problem is that I like 80% or better. 70% just too close to me, and technically you too damn close for that. And that's why you're getting that kind of premium. $40 to put up $3,000. So and that's what this video is about. It's give you an idea of how much money people really make with options with certain size accounts. You talking about $3,000 account taking a 30% chance risk of losing in this particular trade to make $40 on your $3,000. This is when I tell you that when people try to sell you the idea that selling options and everything makes you a whole lot of money. Yes, when you have a huge ass account. When you have a $3,000, $4,000, $5,000 account, don't let nobody try to lie to you and tell you that it's easy. Anything other than something with a high probability, like I'm talking about, 80% probability and higher, these are money that you can almost count in the bank almost every time. That means 8 out of 10 times that you can count that money. These other people are going to tell you about something that's going to be risky, and maybe if you're lucky, you might get 60-40 chance in your favor. If you're lucky. 9 out of 10, those guys who are buying calls, buying puts, naked, and all of that stuff. They're taking a lot of risks. Talking about they're looking at the charts, man. Fuck the charts. It's all about price action, in my opinion. You know what I'm saying? So anyway, and so that's the thing. So could we do this? Yes. Do I want to? No, not high enough probability. Again, you can't be in a rush to take. You get to do your homework. Take your time. Fifth Third Bank. Let's see what the banks. I think they're gonna be crashing soon. But don't take my word. I'm not a financial advisor. So Fifth Third Bank. Let's take a look at it. Let's analyze it. $25. Okay. All right. So then let's go down. What we got for volume? 4 million. That's not bad. The yearly high is $38. The yearly low is 22. So just keep that in your mind. 38.22. Look at the analysts say a 72% chance buy. So these are all good indicators right here. Then if we end up getting stuck with it, we still make 5% of our money on quarterly basis. Hey, 5% compared to 1% or 3% a year, 5% a quarter. Hey, even 5% a year is better than how much you make it in your checking account. So just think about that. Shit, $5 on every $100. So that's that. All right. So let's go tell you, see if we can get. I mean, and this market is closed, although it's I'm in Asia right now, so this market is closed right now. I'm up, but you guys are asleep. So today is August 20th. Let's go out to, look at this. I love weekly options, and that's the one I'm going to look at. I might look at next. I don't want to stretch a video out too long. But let's just say, as a matter of fact, let's go to September 22nd. We're going to sell the put. They kept us righteous. Okay. Oh, look, guys. We just might have us something here. Here we go. Now. Look at this. $20. 1 month out. $23 put. The share price is $25.50. 83% chance of profit. So just keep in mind, $2,300 bring you back $20 in 1 month. You see what I'm saying? With high probability. So how many do you think it takes you to make $500 a month doing this kind of strategy? And how much do you think it takes you to make $1,000? You know how big your account had to be? You see what I'm saying? So when people try to sell you this notion that, you can make $500 on a $5,000 to $2,000, $3,000 account selling calls and puts, and they're lying. It's just simply not true. Anything is possible, but man, to be honest with you, you'd really have to go look for that kind of risk. That's dangerous. And the chances are 90% of the time you're going to lose. Your risk is going to be exactly the opposite of what my risk is. My risk is 20% chance of loss, less than 20% chance of loss. Those people's risk is going to be probably just the opposite. It's probably going to be 80% chance of loss, So don't get your hopes all up messing with trash. So I like this, to be honest with you. So this is what I'm going to do. I'm going to take the setup. So there, you can look at the limit price and see, since the market is closed, look at that. And what I like to do, if I'm going to set up things and put in the limit order for when the market is, I typically don't like to do this while the market is closed, but sometimes I fall asleep, and so the market opens up and it'll jump. And so just in case it does jump, this is what I do. You don't have to do this, but I'm just saying, if you're okay with making a certain amount of money, right now this is at a $20. What I like to do is I look for the highest point of where it's at. This saying that the high point is $35, right? Again, remember, in order to do this, you got to have a $2,300 account. And you have to have at least $2,300 in your account to get this $20 for the month. You know what I'm saying? So imagine $50, on this particular. Imagine $4,600 bring you $40 if you took that trade. Like for me, I'm not gonna take at 20. I want to make at 40. Now, will it go through? Probably not. But what I'm going to do is put it in at somewhere around 40. Let me see. Yeah. So if it's 35, the minimum I would take is at the asking price, which is at 35. So just imagine if I did two of these, I could get $70 put in my pocket if it opens at 35. So I'm gonna put it at 0.35 at the highest point that I possibly can, and that would be that. Actually, this is a different account, but because this one only has 450 in this account, I have to go to another one. Let me write this one down. But anyway, so this is just an example of what you would do. FITB. Okay. This is just an example of what you would do, guys, and what you're looking for, and what kind of credit and what kind of money you can expect to make by doing a wheel strategy. So, or selling puts. Period. Selling puts. An idea here is that to keep on selling it without it getting put to you. That's the objective here, really. Because really, man, let me teach you a secret. The best businessman is the best middleman. You never really want the stock, and you never really want to get caught out there. All you want to do is take your money out the middle of the transaction. Don't be a sucker. Trust me. Anybody who's sitting around here holding, man, that's fine. But look, I just did an AT&T I just sold AT&T, and guess what happened? AT&T just started falling because they got sued. AT&T is a staple. But I lost hundreds of dollars holding on AT&T for what? When it got put to me, I was like, okay, it doesn't matter. It's AT&T. But then shit, it lost $500 in a couple months. It's not worth it so that's that. So and just to give you guys an idea, check this one out. All right, so yeah. So anyway, well, I guess that should be. I'm not sure what I did. Maybe I did something wrong with the Fifth Third Bank trade options September 22nd. Change the profit 35. There we go. 35.35 minimum credit. Collateral, they want 2,300. Y'all see that? See what's going on there? All right. So, and then we're gonna push that on through. So as you can see, I got that queued up. This is short put order. I sold that put. I made $35 on a $2,300 in collateral. So, are there bigger and better trades? Yes. Is that any money? No. That's why I say these kind of trades are very low risk, but they're not high money. The key is to have a big money account and just keep on building. That's why I'd say that if you want to make $100, $200 a month, you're gonna have to have between $5,000 to $10,000. You can make $100 a month on $5,000, give or take, depending on which trade you make. 10,000 a month, $10,000 account to 15,000, make about $500. Yeah. So as you can see, you only gonna make about, like I say, on average, for every $2,500, just imagine $25 per every $2,500. How about that? You could on the low end with 80% chance of profit or higher. Okay? So just throw that out there, man. I mean, you guys tell me what you think. If you can line up a bunch of different trades where you're making $100 or 80%, using all of these things, it being a dividend, having 80% or high probability, with over 500,000 in volume or better, and you find those, send that to me. I'm interested in that. The community would be interested in that. I'd like to see which ones you guys got if you were able to come up with something like that. Because those are elusive and they're usually hard to come by. So collectively, if you see them, with all of those combinations together, good implied volatility, I would say your IV should be somewhere around between 40 and 80%. Don't forget, man, a lot of times, man, look at your Greeks, because sometimes the Greeks, can tell you the secret, you know. So look at all of that stuff, We usually want a 0.15 when we're selling anyway. So, just I got you here. Let me see here. Let's go down to 80%. Let's look at the Greeks down here. Look at that delta. See, that's exactly what I'm talking about. That's why I say I think this is a good one. There you go. So at least that means you got 80, more than 85% chance of winning, or 84% chance of winning this. And that's why you see over here, chance of profit, 83%. See? So that's what you got to know. When you have a 15.15 delta, that means you got an 85% chance of profiting when you're selling like this. So you guys let me know, man. I wish y'all the best. Cozmik Trading Academy. I'm Mr. Cozmik, man. I'll see y'all soon. Like and subscribe if you're interested in that. Comment below. I love options. And check. Hey, let me know. We also trying to set up an investment account, a group investment account. If you guys interested in that, let me know. You can invest. We're gonna set up a whole separate account and label it like the Cozmik Trading investment account. And the objective is basically see how much return we can get for our account size and do monthly returns and then kick it back to the investors. I think the maximum we could have is like 100 in the group. So without going through any kind of litigation or issues and stuff. So I think the maximum our team could have is 100 people. So anyway, that's that, guys. Take a look. Cozmik Trading Academy, train, travel, and trade. We in Japan, man. We living. And, just holler at me. I'm gone. I'll see y'all later on the flip side. Thank you.
I don't see nobody else. I see myself. I'm looking at the mirror.